Music. Yeah. I had to fix that camera. I don't know why it went off, but it went off. How you doing, friends? Ernie here, and this is the final hour to expiration show. And yeah, I'm a little bit disappointed. Made money today, but probably skipped out on many, many hundreds of dollars. But it's still salvageable. It's still salvageable because we're early in on the process. Now, let's see. All of these decisions, do I pull the hack or do I don't pull the hack? I'm asking you, should I pull the hack or keep the hack on? Now, keeping the hack on guarantees a nice little profit. Pulling the hack potentially opens me up to almost 8 times the profit. Well, not 8 times. Let's see. We would be talking about 5 times. Got to be accurate here. But 5 times the profit. What shall I do? Well, let me let you in on the little the dilemma. And I will also introduce to you an interesting way to hack the system so that you can avoid, with a small account, avoid the pattern day trader rule. Now, what is the pattern day trader rule? And that's the rule that you cannot open a trade and close a trade, the same asset, in the same day, and have more than 3 occurrences of that in any 5-day rolling period. If you do, and that's if you have under $25,000 in your account. If you do, they will close your account, or not necessarily close it, but they will restrict your trading dramatically unless you pony up $25,000. So there is a way around that. And the way around it is to never close a trade. Now, you may be saying, yeah, but if you don't close a trade, how do you take a profit, Ernie? Well, you take a profit by putting on the exact opposite trade with a different option type. And then you put it on when you've achieved a certain amount of profit and it locks you in. Now, that's fine and dandy, but let's say you're trading with a really small account and you've done that, say, 2 or 3 times in a row, and you're waiting for everything to settle, and in the meantime, you've eaten up all of your buying power. What do you do then? Well, what you do is you have to make sure, first of all, that you have not only your equities account valid, but you also have to have a futures account valid. And with a futures account, you can do the hack with your futures. Now, there's a little sleight of hand here. And with the futures, you don't care about opening and closing. You can do it as much as you want. And you'll never actually run into that buying power issue. So it's a little bit of a trick, and I'll demonstrate when I get into it. But first, we have to get to much more important things, and that's to say hello to whoever is showing up here. Well, let's see who's showing up today. We got Iz. How you doing, Iz? Nice to see you. Clayton, haven't seen you for a few days. Nice to see you too. Jim Seraphin, good to have you here. Scott Sommer. Let's see, SPX 40-minute expected move is roughly 15 to 16 points. Yeah, well, I mean, you can throw that estimate right out the window because it was only about 20 points about 60 points ago. So you have that, right? Milo's here. What about asking your broker to switch you to be a cash account? Well, you could do that. That will restrict you as well. As long as you don't use the same buying power more than once in a day, I think it is, except for the pattern. Well, let's see. Will you be able to trade certain types of spreads? That's what I would like to know. I don't know the answer to that. How you doing, Hans? And that's correct. PDT doesn't apply to futures. So you can get the best of both worlds with futures. See, the thing is, if you use the SPX, you can take advantage of the low commission, and then use the futures as a way to hack your profit, right, and avoid the pattern day trader rule. Donald, how you doing, man? Nice to see you. Yeah, okay, that's what I thought. You can't trade spreads with a cash account. No, you won't be able to trade spreads with a cash account. Okay, we have two experts, Iz and Chris. There you go. So it's a no. All right. Okay, so it's a no-go. All right, so we can't do that. Now, as far as the expected move that was mentioned a little bit earlier, let's go to the charts. All right, so when we were up here at about 39.57, the expected move was about 20 points, right? So the expected move right now is about 15 or so. Let's see, how many points did we drop? So 39.57 all the way down to 39.13. Wow, that looks like more than 40 points. Imagine that, twice the expected move. I put little weight in the expected move. I mean, it's okay to look at and say, oh, okay, this is what is expected based on a normal distribution. But it's the same thing when you go and you look at delta or any of the statistical properties that are in your options trading platform. They are just estimates. They are averages. They are the mean, and they mean very little. It really comes down to what is the context of that day, what's happening on that day. Because that is really an average. So that means that you take the average of all of these days that are kind of like today. It doesn't mean that that's what the actual is going to be. Oh. See, so we have somebody that said they were going to call me, and I said, you need to call me now. This was about 45 minutes ago. And I said, you got to call me now because I have a show in 45 minutes. He goes, okay, I'll call you. And they just called right as I'm starting the show. All right, let's see. Who else do we have on here? Okay, we got to get there. We have Jelly Dog. I have a cash account and trade spreads. Okay, so there's conflicting information. Yes, but is it more than 25,000? I don't know. I mean, do you have a larger account? I mean, if you have enough cash to be able to handle it, I suppose, then you're cash secured, right? All right. So Scott, how you doing? Jago, good to see you. Vadim, how you doing? All right. All the usual suspects are here, and all willing to add their expertise to the conversation. I'll find out about that. Find out, what's available, what you can do with a smaller account. Now, I'm not sure why anybody would really want to. I understand why some people want to trade with a small account and take advantage of strategies like this because you don't want to put too much at risk. But what I've found with this particular strategy, there's a certain size of an account that will almost guarantee, there's no guarantees, obviously, in life, but almost guarantee that your risk of ruin is virtually eliminated once you have a certain size account. And for this strategy, I found that that's about $5,000. So if you have about $5,000, the odds of you actually drawing down enough to, say, get beyond a 50% drawdown right from the outset is, I don't know, it's like 1%. So very, very low odds. So if I were trading this strategy, that's what I would do. I would start with, a $4,000 or $5,000 account. Then your odds are very, very slim. And I've gone through many different iterations of this, analyzed it up and down, and that's about it. When you get down to about, say, a $2,000 account, there's about a 30% chance of drawing down about 50% or more. A $3,000 account, it gets down to about 18%. 4,000 gets down to single digits. 5,000, it gets down super small. So just keep that in mind. And that's really a function of trading the things that we trade, which is primarily the SPX and the E-mini S&P. Okay, so Iz says, spreads on the ES are okay, just not on anything else according to TDA. I tried that. What's up? What the rep told you. Okay. So it wouldn't work on the SPX probably because of the margin requirements, but it would work on the futures. There you go. We shall take that as gospel, Iz. All right, so let's talk about this trade today. Now, the trade, the call was made actually before the market opened. And let me back up a little bit. Here's the 15-minute chart. I'll spread it out a bit. All right. Let me center it, and you can see it much better. Okay. So here's the landscape. Of course, here's the drop that we had from the CPI, and PPI didn't fare much better. We're dropping due to that as well because it, pretty much confirmed the CPI. I think a lot of Wall Street institutions and others were hoping that it would provide some reason to go back up, at least do some level of retracement, but that didn't happen. Instead, we're going down again. And that was my prediction. That's what these arrows are. So this morning, after doing my analysis, after the economic reports came out, before the market opened, this was my analysis. So you can see that this path that it took is almost exactly duplicating what I said. And I also have this further on analysis that I think that it could go much lower. Now, I personally think that we're potentially going to end up somewhere near this LVN, which is right around at 38.96. That's where I think the potential is, only because, well, this is a volume node, T1, the shaded in area. And then each of these green lines represent low points inside of the LVN, or the low value node, ultra low points. And those are significant levels. And you can see that they're significant because price comes right down to them and finds some sort of inflection right there. All right, so we have a question. You're going to talk about the PD hack per the Discord. I think that's what I'm doing right now. All right. Looks like he's doing a retraction here. Sorry. I need to keep quiet. I retract previous statement about trading spreads on ES with cash account. I'm confusing two calls with TD. Okay. All right. Good. Now we've got that settled. We still don't know what the hell we're doing. All right. So there's the setup. And of course, the trade that I called out was this spread. This box represents this butterfly. The top and bottom of this box represent the outer legs, and of course, the middle would represent the center strikes, which would be at 39.05 and 39.05 and 20 wide. And so that was taken, I don't know, I would say right around 8:45, right about here. Right about there. And so that looks like it's working out pretty well. Now, I'll have to say that I got out of that trade right here. I didn't get out. What I did was I locked in the profit by instituting a pattern day trader hack. Now, in this particular account that I trade with Thinkorswim, I have like 3 accounts, and this one is my super small account. There's like a couple $1,000 in it, so I have to be careful with day trades. And in fact, it's already in a day trade restricted mode, and I have a margin call on it. But so until I put $25,000 in it, I don't have full freedom. However, I can still open trades. I just can't close them. Otherwise, they'll get really mad at me. And anyways, what I can do, though, is I can open trades and then open other trades that will lock in the profit of those trades and then allow them both to expire without ever closing them. And that's okay. So thereby I can create the profit that I need and not have to worry about any strikes against me or any, negative things happening. Now I can use either. Now I'm primarily trading with the SPX. So if I put on a butterfly and then I get some profit, typically what I'll do is I'll add the opposite trade using the SPX again, thereby locking in that. So I have a debit trade on the first trade, then I put on a credit trade on the second that has the exact same criteria, and that locks in the profit. However, if I've done that, say, 2 or 3 times in a row, successive days, I still have some settlement going on, and that eats up the buying power. And so if I make a sufficiently wide spread, I may not be able to hack that last spread closed. So what's the answer? Well, I just go to the futures. Futures don't have the pattern day trader hack, and when I put on a credit, I'm not eating up any buying power. So I do that, and I'm able to essentially put on a futures trade that's twice as big as or twice as many contracts as the SPX trade, and then that effectively locks in that profit. And so let me show you what I'm talking about. All right. So here's the original trade that I put on, the SPX. And it's a 39.05 and 20 wide put spread. Now, by the way, it doesn't matter if I put a put or a call spread up here on the futures, because I'm not really worried about overwriting or closing any of these trades because they're different asset types. But you'll also notice that it's twice as big. It's 2 flies as opposed to 1 fly on the SPX, and and it's the exact same trade, but it's being sold for a credit. And so I opened up the SPX at $2, and then I opened up this credit at $3.50, and it's the exact same trade. So no matter what happens, I will gain $150. So that's how that works. Now here's the dilemma. I am sitting here like so. And if price moved right to the very center, let me show you the other half of this. Here's the other half of this trade. Here's the E-mini S&P. Let's see. Oh, I'm not showing you anything, am I? Or am I? Let's see. Let's make sure that I'm showing. Yeah, I'm showing the display. Okay, good. All right, so here's the other half of that trade. Here's the E-mini. So it's basically looks like the inverse trade, right? And the difference between the debit or the legs here and then the legs on the other trade on this one is my profit. And currently that is the difference between the debit and the credit that I have there, or $150. All right, so I'm sitting here and, it's up in the air whether or not price is going to stay inside of that box. Man, if I had a crystal ball and I knew it was going to end up right in the middle, I would take that E-mini trade off in a heartbeat, because that would mean another, $300, $400, $500 profit. So that was my dilemma. So let me zoom in on that a little bit more. Right, so there I am. There's a zoomed in version of it. And we don't have too much time left. Let's go to 1 minute. Let's see if we can actually get a trade on right at the very end and kind of anticipate where things are going. All right. This kind of represents when I put the trade on, right about there. So we can move this forward like that. But the right side of the box of this fly, that represents 4 o'clock. So that's the end, once we get to the end. And you've seen me do this before. So, all right. So now the big question is, where is this market going to end? There's the big question. Where would you put a trade for this final 24 minutes? You know, would you, I think personally, I think that this is starting to look like the ending point, this little nub right here at 39.32. What do you think? You know, we've been really guessing this horribly over the past few weeks, and it's been very, very difficult to trade. But our day trades during the day have been working out fantastic. You know, we're making money left and right, but this final hour trade has been elusive, at least on the last 35 trades that we've done with it. Prior to that, it was, you know, it seemed like we couldn't miss. All right, so there we go. Where do we put this trade? What do people in the peanut gallery say? All right, so Lance, I think hopefully you understand what I was talking about with the PDT hack now, and how I used the E-mini to offset it. Simply, I put on a credit, and that offset it. And you want to make sure that it's exactly the same trade so that under all conditions it will offset. All right, so Mahmoud says 39.05. Let's take a look at, well, 39.05, that's way down there. You know, that's assuming that this market is really, that would be my center strikes. That would be what I originally called. And let's see, Lena's saying 39.18. Any other guesses? All right, 39.18 is basically where we're at right now. You know, there's you know, some, I would say that there's 39.18 is probably closer to anything that I would think, but I'm thinking that we're going to be inside these two LVNs at 39.45 and 39.22. That's why I was picking this node here at 39.32, which is about halfway. And let's see, Steven's saying 39.40, which is way up here. Yeah. And, you know, when I got out of the trade, right about here. No, was it there? No, it was right about here, I think it was. I really thought that we were going back up to this level here, this session POC, which is at what Stephen is looking at as where we might end up, and that's at 39.44 or 39.45. All right, and Rod's saying 38.95. Well, that's way down there. That is way down there. That's this LVN down here, and that was where I thought price might go or extend down to at the beginning of the day. And Alan's saying 39.30. All right, 39.30, which is close to what I just said, the POC, or this little nub here. All right. So, yeah, this is a tough one. It's sometimes you can look at the volume building Let's like really zoom in on this and see if we can get a good feel for this. There's no real buildup in, no stark buildup in volume yet. So I'm going to guess here. I'm going to say it's this little nub, like I've been saying for a little while. At first I thought 39.45, but I think it's really going to be this guy here, 39.30. All right. So what we'll do is we'll put on a trade there. All right. Let's do that. Now we'll put it on with the ES. All right, 39.30. Jago says 39.05, which is way down there. Man, I don't know. Let's see what this one looks like. All right, so we're kind of adding to this trade here. Let's see. That's the wrong contract. That's the continuous contract, which looks like it's simulating the Z contract. We want the U contract. There, that shifts everything over. So if we get the 39.30, we're taking a little bit away from this here. Our cost is only 35 cents, but that's 5 wide. Oh, that's not it right there. This is it right here. 75 cents for 5 wide. It's pretty expensive. Maybe go up one more strike. That's kind of interesting. So if we move up, we can really kind of bank it here. $3.50. I don't know. It's not a yeah, let's do this. There we go. 260. All right, so this is the E-mini. So $2.75 is actually half of that. That's $1.35 for a 10 wide. But let's see what the risk to reward on that is. So we have 10 wide, which is 1,000, minus 310 equals divided by 310. That's going to be lousy, 1 to 2. That's a horrible risk to reward. We'd have to go way out of the money here. Maybe the 39.45 is the right call. Has it moved up since we've been talking too? Look at it. It's moving as I'm talking. That's why. So maybe what I had said before, the session POC at 39.45 is the right one. Let's try that. See what kind of pricing we get on that. $2, $1.95. So 1,000 minus $1.95 divided by $1.95. That gives us 1 to 4. Even that sucks. Oh, that's horrible. All right, so we have Dum asking, do you pick the same strike for ES and SPX? There is an 18 basis point difference between the two, right? No, there isn't, because the options that we're using for the ES are still the September contract, and the SPX is still working off of or pegging to the September contract. So they are both almost identical. Ray says, I'm going to take a pass on this one. I don't really blame you, to tell you the truth. I'm trying to get a good risk to reward, and I can't find it. Okay, now we're down to $1.50. What does $1.50 give us? Let's see, 1,000 minus 150 divided by 150 is 1 to 5.7. That's like right at the edge. That might be worth it. It just might be worth it. That would eat in a little bit to the profit that I've already locked in, but if it moves up right at the last moment, we could end up making a really nice profit. So let's try that. Either way, I'm going to make money. I mean, it's, you know, almost impossible that I won't make money here. All right, let's do it. We got it. All right, let's see what happens. Now, if price moves up, we're going to be heroes. Well, I'm going to be a hero. I don't know what you guys are going to be. Yeah, IV may be pretty high for this time of day, but you know what IV can't compete against, Vadim? It cannot compete against time. That's right. It cannot compete against time. It is impossible for IV to compete against time. So what we really want now is we want price to move up. So we got it on this little pullback. Maybe it will move up. All right. So Multiscan is saying that 18-point difference between ES and SPX, will it make a difference next week? Well, it won't be there because next week the September contract will be done and we'll be dealing with the E-mini December contract. And the December contract is ahead of the September. So let me just show you that. We'll go to charts. Oh, see, I was doing a little chart here, which was an arbitrage between the 2-year Treasury and the 10-year. But let's look at the E-mini Z. And make that a candle. All right. So you can see here the price of the Z contract is $39.49, and the price of the U contract is $39.31. But the price of the SPX, let's add one more pane here, and we'll add the SPX in there. The SPX is $39.32, which is the same as the U contract over here. All right, so the SPX is still maintaining the same price as the September contract. And then next week, it won't just automatically jump up to the Z contract. It'll jump up a little bit, and then it will slowly close that gap over the next 3 months, going from September, October, November, December. And that arbitrage that will close, that gap will close. All right, makes sense to you guys? All right, so we want price to go up. Is price going to go up? And our reasoning for price to go up is because we have this massive session POC right here. And the idea is that price is going to go up and meet that. We only have 10 minutes, though. 10 minutes. Come on, we need a big win today. We need a really big win. Come on. Let's do it. It's already working out. All right, so we got in at $1.75. down here. Let me move that up to, come on, there we go. Let's move that up to this group, the number 3 group. One of the legs is already in the money, so that's good news. All right, so we have, let's close this so we can see everything. All right, there are all our trades. So we have the one that we just put on that's already worth $97. The original trade's worth $315. The hack is worth $165. So those things, that's what's offsetting. And man, look at that. We're doing fantabulous. Boy, it's been a while since we've had a winner. Let's hope that, let's see if we can pin it. And it's very close to a pin. Look at that. Look at that. If it gets right up here, that'd be great. So let me just undisplay this one so you can see exactly where this trade is lying here. And it's right there, right in the middle, right inside the profit tent. So right now, this trade is worth $110. We got in at 175, and so it's worth well more than that. It's worth let's see, what is it worth? $1.75. That's actually 1/2 of that, so about 80 cents. So it's up there. Let's see. Pretty good. Pretty darn good. Come on, move up a little bit more. We need you to move up here towards 39.45. See, here's price. Come on, baby. Not too far to go. Finally pick a winner. Man, it's been a long time. Well, we got a winner last week, but it was a very minor winner, you know. I was getting worried that this final hour trade was starting to be a bust, but you know, it's hard to ignore what happened the first 50 trades because they were just off the hook. Good. But these last 35, 36 trades have not. We are almost right at a pin. Look at that. That green line right there represents the pin. Right there. Let's go to the chart. Let's look at this, right in the center. There it is, right there. All right, Steve Vermeulen wants 39.40, and that's not bad. That would, even for that would end up, you know, being a good winner for us. Not as good as 39.45. 39.45 will make us about $350 off of a $75 bet, not even a $65 bet. Now, we need a pin. Now, because this is a futures, I don't want to allow this to go into expiration. We're at 55 minutes because then I'll have to deal with the assigned futures contract. So what I'm going to do is I am going to create a closing trade. Let's see. It's down here. I'm going to create, see, there's one contract in the money. I'm going to create a closing order and stage that and be ready. So right now it's at $4.50 credit. If I miss it, and if my limit order, because of the gamma risk, I'm unable to close it, then I'm going to have to wait for the trade, for the contract to show up in my account, and then I'm going to close it right away. So now it's worth $5.20. Pretty darn good. See, that's the Z contract. I want the U contract to get a proper look at this. There we go. See, it dropped a little bit. We need to go back up. Less than 4 minutes to go, and we're very close to a pin. All right, so my my hypothesis was that we would hit this session POC right here. See, that's the session POC right there. If I brought in all of the volume from this current session. See it there, that node? So it's between you and me, Stephen. You've got 39.40, I've got 39.45. Either way, I'm making really good money right now. It's a good day. A very, very, very good day. Risking very little to make a whole bunch. That is the nature of our trade here, taking asymmetric risks. Less than 2 minutes to go, and we are so close to a pinned trade. Yeah, nail biting time. Come on. You can do it. I got to get back to that. Look at it, it's worth $6.40 now. All right. So when it gets up, man, I am right there. 25 cents away. A little over 1 minute to go. Yeah, I'm gonna lock this in right there. Oh, get out of the way, so I can do this over again. It needs a 25-cent grabbed it. It had to be 25-cent increments because when you're over $5, you have to be 25-cent increments. Otherwise, it won't take the limit order. All right, so I just locked in that profit. Nice. I opened it at 175, closed it at 6. And then on the other one, I opened it at 2, closed it at 350. So good day. And did we close on the, yeah, we closed almost a perfect pin. I probably missed out on 50 bucks, 60 bucks worth of profit, but that's okay. We like that. Big trade today, big trade. All right. So now we're way in the green now with our final hour trade on that one trade. We can screw up another 5 times and still probably be in the green. So that's cool. All right, let's get back to the big head. I'm very happy. Finally, pinned a trade on the final hour. All right, so I feel good about that. Now, you'd be surprised on our day trades. We've been pinning trades left and right, and so those have been working out fantastic. And the membership is just doing great. Some people are a little bit hesitant because they're still getting into the strategy. They don't know when to actually take a profit. And so that's just a learning process. But the members that have been here for a while, they're just killing it. It's great. So really the premise of all this is that we take asymmetric trades on the very final day of expiration where we have essentially 2 or 3 different large edges on our side. And we're never really in any kind of anxiety-ridden mode at all. As a matter of fact, it's super calm and relaxed trading because we trade with very, very tiny risks, going for huge outsized profits. And we use only volume profile as our technical indicator. It's not even a technical indicator. We use volume as our number one way to determine where support and resistance levels are. We do not use any technical analysis. So there you go. Pinned a trade today. Pinned it. Okay, so there's a good question. How many losses does this win clear up? Well, I've been going sideways after 35 trades, I was down $23. All right, figure that. And here I just made well over 300. So I would say that this would cover, I don't know how many that would cover, but even if I lost like the next 5 in a row, I should still be okay, maybe even again. I'd have to lose 5 straight to get back to even, at least. So that's not likely to happen. I mean, we don't often, lose that many in a row, but it's just that we've been going up and down, not really ever really pegging anything or not taking a trade. So it's been a little frustrating. All right, Service Euro says, what's your thoughts on adding hourly updates on the trades that you sent during the day, or could noon updates? I'm there all day talking about it. Everyone's asking me. I'm leaving questions. But if you're thinking about regular updates, that would be extremely difficult for me, because you got to remember I'm supporting 600-700 traders. They're all asking me questions all hours of the day. I don't know how I would do that. I don't know how I do what I do now, to tell you the truth. So that would be difficult. But I'm there every day. You can call me if you want. All right. Did the ES for the first time today instead of SPX, kind of unnerving. The price keeps changing after the end of the day. Well, who cares? I'm out of the trade, so I don't care where it goes after the end of the day. But it isn't the first time we've done the ES in this final hour trade. We've done it in the past, many times. All right, and Ray saying, not a fan of ES. ES doesn't end at 5 p.m. Yeah, it ends at 5 p.m., but the options close at 4. I happen to be a huge fan of the ES, but that's only because, I've been trading it as a professional institutional trader for many, many years. At one time I was trading a 9-figure account doing nothing but the ES and other futures contracts. So I feel very comfortable with it. I understand the discomfort if you're not used to it and you're not trading it. And you don't understand the contract specifications and all the ramifications of that. I understand that. But once you get down a few of the basics, it's really not that bad. And doing it in concert or in tandem with the SPX, it can be a real powerful way to trade. How you doing, JD? For someone new watching, do you have a video on your channel you can link outlining exactly what this experimental strategy is? No, we're discovering what the experimental strategy is. So really, it's the experiment is to trade the final hour and give it 100 tries, right? So currently we're at about try number 86, and the first 50 were. It was in a different regime in terms of where the market was. The market was coming down strong. The second 50, and we're 36 into that, it was during a bear market rally, and we had completely different market dynamics. So we're taking all of that information in and then going to analyze it at the end of that 100 trades and try to come up with some relatively cohesive strategy after that. And if we can't, we'll probably end up doing another 100 trades and try it again until we, figure this out. We're not committing a huge amount of money to it like we're doing on our normal day trades. So we're doing minimal commitment to it. However, so far, it's been a very successful strategy. The first 50, like I said, was way up. The second has been flat to a little bit up. And so when you look at it from that point of view, it's been very successful. And whether or not, and that's trading, just a very tiny bit of capital. We haven't really drawn down. Here's the important part. We haven't drawn down hardly at all. The max drawdown has been absolutely minimal. I think at one time we were down $120 after 70 trades. That was only in the second half. After like 20 trades or so, we were down $120. The first half, it was just up. Kind of hate zero DTE. Well, if you traded the way we trade it, and I'm sure that what you're doing is you're doing high probability iron condors, which is absolutely the worst way to trade zero DTE. You trade that way, and you're going to have a huge bummer. But why don't you try out our service, and you'll find that it's a completely different paradigm, completely different service, completely different strategy than what virtually everybody else is doing on zero DTE. I mean, that's why I'm here, to sort of demonstrate that there's no anxiety in getting into these zero DTE trades because we're risking so little and then going after so big of a nut that it makes this kind of trading completely stress-free. Of course, there's always that little bit of stress. You're always trying to, charge on, your trade, and you want to win and so forth. But it's the amount that you're losing that really doesn't hurt your account. And so you can keep on going at it, looking for those bigger wins, and then they come. Like today, it came, right? Got a pin trade. You put on $70 risk, never risking more than $70, and you return almost $400. Not bad. I don't know how you argue with that. All right, Doc Russell, how you doing? I saw you mention something about using the ES to offset an SPX fly as a pseudo PDT hack. My broker has liquidated my ES fly to avoid assignment. It seems like you could get in trouble with a pin too. So what you need to do is you need to go to your broker. Now, you're probably using Tastyworks, right? You're using Tastyworks? Tell me, Doc Russell, you're using Tastyworks. Because Tastyworks will kick you out because they don't want you to get assigned, right? Now, here's the deal. If you go to Thinkorswim and you convince them, well, it was easy for me to convince them because I've traded such a huge amount with them. But if you tell them your plan and that you have it completely under control, they'll take that switch off on Thinkorswim. But you really have to convince them that you know what you're doing. And it's not that hard. And if you practiced it, you'd get good. You'll be able to convince them of that. And you should be able to have that restriction lifted. I have it lifted. They never early assign me ever or kick me out of a trade. All right. So I know that they've gone to my specific account and lifted that restriction. But with Tastyworks or any other broker, they probably wouldn't even talk to you. Thinkorswim, TD Ameritrade, they'll talk to you. But what I would do is I would get practiced at it first, right? Know exactly what your execution is. Come up with a plan. Tell them this is your plan, that you're experienced at it, and so forth. Yeah, I know. It's what I just said is TD will also kick you out. I've had them close the position on me twice, and each time I called, and they told me I would need to call them each time. See, the thing is, you call them and you ask them to lift that restriction, but you have to convince them that you know what you're doing, and they will lift it, and then you don't have to call them anymore. The key is that you don't screw up. You screw up, and then they'll put the restriction right back on you. Now, what does screw up mean? Screw up means that you get assigned, and then you don't do anything about it, and then they have to go and then take the trade off. They don't want to do that. The easiest way to not screw up is just to exit before it goes to expiration. But if it does go to expiration, be ready to take it off immediately. That's all you have to do. And then they will never bother you. Yeah, if you call them, though, you have to convince them that you have it completely under control, that you tell them exactly what you plan on doing and that you're watching it and there's no need, right? And after you've done it a few times and you've proven yourself, they'll just leave you alone. Right? They're just trying to protect themselves, and I understand that. But you have to, you don't get any respect until you earn the respect. That's what it comes down to. All right? All right. Another good day. Seems like it's been, a flood of good days in the service. Everything's going great there, and now the final hour trade is picking up. I have good feelings about this going forward. All right. Thank you all very much. It's been great. Oh, we got a question. Let's say they lift the restriction. What is your pin a trade? And say, what is you pin a trade? Doc, is this your kind of English? What is you pin a trade? Okay, what if you pin a trade and get assigned on both ES and SPX? Well, SPX you don't care because it's cash settled. SPX doesn't mean anything. All you care about is the ES. That's the only one that has any risk associated. You cannot take these ES flies off early if you're trying to do a PDT hack, right? Yeah, you could. Sure, you could. I mean, when you take it off, whatever your profit is at that time, it's done. And if you take it off at the right time, there's little risk. But if you're doing the PDT hack with the ES, that's a different story. And if you come and you're going to get assigned, all you have to do is just wait for it to get assigned, be ready for it, and then use a market order to get out of the ES contract. The reason why you use a market order, you think, oh God, use a market order? Is that crazy already? No, because on the E-mini S&P, a market order maximum will have 1.5 ticks of slippage. All right? You're talking about $15 tops. Right? $15 tops that when you put a market order on an E-mini trade. So that's why you don't do a limit order when you're trying to get out. You just do a straight market order because it's such a thick market, so liquid, you can get out like that. And that happens at any time of the day or night. You can get out like that with the E-mini trade. All right. Milo says he's almost sold. The risk reward is a totally different ball game compared to things that I've done in the past with call, put, snipes, etc. Once you've become practiced and used to the futures, they are super simple, right? I may make it sound easier than it is at first, and for me it is because I've been, trading futures in a very large way for a long time. So I'm very comfortable with it. But what I'm telling you is the actual execution of this is not hard. It just takes a little planning and be ready and then execute. It's the matter of, clicking 2 buttons. That's it. Well, regardless of whether they count towards the PDT or not, what you're really worried about is the assignment. And if you get out before the market expires, then there's no chance of assignment. If it goes to expiration and you're in the money with any of the contracts and they're not offset with another one, you're going to get assigned. that happens, then what you do is you sit there, you stare at your account, you wait for it to appear, and then you click on it and close it with a market order. All right. Well, thanks, JD. Yeah, all of you, just smash that like button. What's going on here? Smash that like button. All right. Now it is time to go. And so we need the Music Man. Peace to you all.